bank CEOs this week on CNBC warning that cracks are starting to show in the U.S. economy. J.P. Morgan's Jamie Dimon and Morgan Stanley's Ted Pick yesterday. Wells Fargo CEO Charlie Scharf telling Squawk Box this morning that he, quote, sees more downside to the economy. But joining me now exclusively here at Goldman Sachs Communacopia and Technology Conference in San Francisco is David Solomon, Goldman Sachs Chairman and CEO. And I do want to talk to you about that. But first, I think we have to talk about where we are right now, especially given how voracious the market is about AI on the heels of this monster move in Oracle, and so many, I would call them optimistic takeaways from CEOs here at this conference.
Well, first of all, thank you for being here, and thank you for having me on the show. This is a conference we started in 1991, and if you think about the changes in technology and media over that period of time, email was just invented in the early 90s. Nobody had it. You think about where we are with AI, you think about the interest. There are 3,000 clients here. Hundreds of companies, coming together, and really, of course, the theme is on how this technology is accelerating, how is it going to evolve, how is it going to create productivity, and the level of excitement and the tailwinds that has for economic growth and investment are really, really quite strong. And so it's fascinating to be here. There's a lot going on in the world. We can talk about the macro and some of the things that balance, but if you're looking, over the horizon, these are powerful forces that certainly are going to drive growth and productivity in very interesting ways.
Do you think the exuberance and I think all the spending that's going into this, especially in the AI infrastructure piece of this right now, does that justify the excitement and the moves you are seeing in some of the stocks and whatnot?
Well, the excitement is justified by the impact this technology can have over time. Whenever you have a new technology, and we've seen this, over many cycles, there tends to be some excessive exuberance about how quickly the change can be implemented in the enterprise, how quickly the productivity gains can come. And my guess is this will be no different. So there are going to be some amazing companies that are formed. There are some amazing companies that have been formed and grow. There'll be lots of companies that are formed that don't make it in the long run. And that's part of the natural cycle. But it's very good for our country to be in the middle of this innovation, as we have been in so many other technological innovations. And, I think you just have to have the lens that whenever there's a new technology, there's going to be some irrational exuberance, and this will probably not be any different.
I want to get your thoughts on the other sort of big market news of the day, and that is we had Klarna's IPO. I know you're one of the book runners, Goldman is. We've got more IPOs before the end of the week, and you've made the comments, even just earlier this week, that deal making is strong. Does that continue?
There's no question the pickup in deal making is really significant. You talk about the Klarna IPO. We were excited to help that terrific company go public. That's gone very, very well. This week, we will do more IPOs and have more IPO activity at Goldman Sachs than we've had since July 2021.
Wow.
So equity issuance this year is up about 15%, but over the last 2 months, it's up 40% year over year. So there continues to be an acceleration. You're certainly seeing a pickup in IPO activity. And on deal-making activity, I don't think people really appreciate this, M&A activity is up about 32% year over year. So 32% more volume. But in deals bigger than $10 billion, M&A activity is up 100%. So the deal-making environment has really accelerated. And I think one of the reasons for this acceleration has been the regulatory environment is unleashing CEOs to think big and think strategically and think about how scale can advantage them in a relatively fast-changing world. And we're coming off a period for 5 years where the regulatory environment was inhibiting that. And so I think we're going to go through a pretty good run here over the course of the next 12 to 24 months.